For demonstration problem 13.2, we are not going to complete the T accounts, but we need the information in problem 3.2 to complete problem 3.3. So skipping down to problem 3.3, we will be entering the employer's side of payroll taxes. So for demonstration 13.1, we were dealing with the employees and how much was withheld from their check. The employer also owes payroll taxes, and he owes 4 different kinds. He owes for Social Security and Medicare, just like the employees do, and at the same rate of 6.2% and 1.45%. And the employer must also pay state unemployment tax and federal unemployment tax, where the employee does not have to pay any of that. So just remember that the employer, when payroll is finished, has to pay Social Security tax, Medicare tax, state unemployment tax, and federal unemployment tax. And this will be recorded in an account called payroll tax expense. So looking at problem 13.2, it says the T Ling gift shop employees had total weekly gross earnings of $3,946.45. And then it lists what the Social Security tax rate is, the Medicare tax rate is, what the state unemployment tax rate is, and the federal unemployment tax rate is. And we figure this based on gross earnings from the payroll register or from the salaries expense listed in problem 13.1, similar to problem 13.1. In this case, the gross earnings is the $3,946.45. So the first thing you do is write the year, and then you write the date from the payroll register, so June 23rd. The debit will be payroll tax expense, and this is the employer's end of payroll, what they owe. And then you leave this blank for now because we need to record the Social Security tax payable, the Medicare tax payable, the state unemployment tax payable, and the federal unemployment tax payable. And so you would take the gross earnings times 6.2% to figure Social Security tax. You would take gross earnings times Medicare rate of 1.45% to figure the Medicare tax payable. You will take the state unemployment rate of 5.4% times gross earnings to figure the state unemployment tax payable. And then for the federal unemployment tax payable, you would take the 0.8% times gross earnings to get that amount. Social Security and Medicare rates are the same as they were for the employees, so 6.2% and Medicare is 1.45%. State unemployment tax rate depends on the state, so it's different. And federal unemployment tax rate can also change year to year. But the Social Security and Medicare always remain the same as the employees. Once you have those amounts figured, you total them up, so you credit, and these are considered payable because the employer owes these amounts to both the federal and state governments. You total the credits up, and that's what our payroll tax expense will be. So that's the debit. And the source document is payroll register and the date. So go ahead and finish this up, and then we'll move on.